Five, four, three, two, one.
Hello and welcome to Money Matters. I'm Sarah Peterson here with the fantastic Dean Greenberg, president of Greenberg Financial Group. How are you today?
I'm doing great, Sarah. Great to see you again.
Always great to see you, and so much to talk about. It's just been crazy times, good times, and we have a lot of planning to do, so let's get to it.
You got it. Let's go.
I want to ask you about risk because it's my understanding that majority of people don't really know how much risk they're taking, and I don't know that they want to know. Maybe they're scared. Maybe there's a fear factor there. What's your thought?
Well, I don't think most people understand what the risk tolerance is. Risk tolerance isn't just about, oh, I can handle that if the markets are going up, or I can't handle it if it goes down. Risk tolerance is about how old you are, what do you want to do with your money, what do you need it to be. There's a whole time frame. And so when you're younger, obviously taking on some risk is greater than when you're older. How much money you have depends on how much risk you can take. What your lifestyle is like, how much you need to spend, those are all part of the plan that goes into it about how much risk you have. So in other words, if you want to retire at 55, your risk that you take at 35, 40 is going to be different than if you want to retire at 65. And or not retire, who knows. But at the end of the day, what you need to do is figure out your risk tolerances. And the only way you figure out your risk tolerances is when you really seriously sit down and think, all right, how do I feel, or how did I feel, if I had money invested at the time, when the markets went down 10% or 20% or 50%? Do I want to go through that again? How do I feel when I sold a stock or a position and the markets kept going higher and I didn't make as much as I could? That's how you determine your risk tolerance.
I mean, a lot of people quite love to make money, but quite also hate to lose it. So there's a fine line, right?
I can't tell you how many people come in and go, I want to make as much money as I can on the upside, but I don't want to lose anything on the downside.
Well, I want J-Lo's booty, but, we don't all get what we want.
Didn't expect that one out of your mouth.
Listen, I think the interesting thing is...
Does your husband know that, by the way?
You know what? We don't need to go there. Honestly, I think that people don't, in fact, know how much risk they are taking. And I'm sure if you ask them how much risk they want to take, they're probably not right about that either. And as we're approaching retirement, that risk tolerance goes lower and lower and lower. So depending on where we start the planning process, right, we're going to be able to take a little bit more risk.
Let's take NVIDIA for an example, or some of these other stuff, but I'm going to take NVIDIA. If you got into NVIDIA in the last couple of years, that stock has made you a lot of money. So say you made $200,000-$300,000 off of it. That's a good amount of money that you make on a purchase of maybe $30,000. Mm-hmm. And it just took off. How would you feel if that goes all the way back to where $300,000, you lose $200,000? It will affect your portfolio because where you are right now, you're thinking that's your money. So it goes from maybe a 5% position to a 25% position of your portfolio. You have to do something about that. And that's what we talk about mitigating risk. There's three ways to do it. You can sell a call and buy a put. So you're definitely saying I have some more upside, but I definitely eliminating my downside. Mm-hmm. You can sell some off. Just take some of the profits off the table. Long-term gains, pay the taxes. Or you can buy the inverse of it, which is what we do a lot when it gets too high. So it's called NVDS against NVIDIA. You're buying the inverse fund that actually goes up if NVIDIA goes down. Now, what you're hoping to do is NVIDIA keeps going up. You lose a little bit on your insurance. You take that loss, and then you're able to sell some of the others and not have to pay any gains. There are strategies you can do to get out of positions that are highly appreciated.
Do you think that, given all the change in the world right now and sort of transitions that are going, people are more inclined to want to take risk or less? Do you think that that impacts?
I think people are nervous.
Yeah.
I think people are nervous. I think they've gotten excited.
Maybe a little bit bearish.
Yeah, I think they got excited about the markets, but they don't know what to do. They hate to sell and watch the markets go higher. They don't know how to mitigate risk, to be honest with you. They don't know the different techniques because most brokers, regular advisors, don't do this. These are institutional strategies that we bring to the individual accounts. All right, and where does that come from? Experience, being around this thing for 40 years, understanding what people need, understanding what I need. Okay, so we do these things to help others, but that's why. But yes, this is what will happen, and that's why you don't know how far the markets go down. If all of a sudden there's a problem with technology, they're overdone, AI is so expensive, and we go through that period of time, those stocks will get murdered like they did in 2022 when they're not down 10 or 15%. They're down 60, 70, 80%. And then people panic because they keep selling it. I got to get out, I got to get out, I got to get out, I got to get out. Sell my mutual funds, and it exasperates the whole decline.
But the way we approach investing when we're really close to retirement, you know, it is different. We're not looking at things, we're looking at things on a much more conservative perspective.
It should be that way. Okay, and what I tell people is one of the easiest way to do it is reduce your individual stock exposure and use ETFs. Because now you've got a bundle of them, or use the indexes, which we use all these, no matter what, into the accounts. Have fixed income in your account. You know, that's the one thing that people don't realize. If, just say you're on the 60-40 quote thing, right? You can adjust that to 70-75. You can go down to 40-50, but just say it's 60%, right? If you now have, because everything appreciated to 70%, cut back to 60. If you're nervous, cut it back to 50, 45% right now. And that way you have it, and that's how you adjust your risk according to that. So that way you don't go all the way down and you have no money to buy if it goes lower.
Well, there's no way for the person sitting there listening to us to know what to do with their money unless they have their own financial plan, right?
Of course, it always goes back to the plan. Okay? If you don't have a plan, you don't know how to manage your money. If you don't have a plan, you don't know how you're going to retire. If you don't have a plan, you don't know how you're going to be able, how much money you can spend in retirement with risk involved. You just don't know that.
Well, how do you get a plan? You have to give us a call. 520-544-4909. This is something we offer for the people watching this show so that they can find out if they are on the right path. And then if they're not, wouldn't you want to know and get there? And this is something that you offer. Other financial advisors charge thousands of dollars for this. You offer this.
And some do it for free too, okay? I'm not saying they don't, okay? Because you hear that a lot.
Yeah.
But the difference is we give you the plan without you doing business. A lot of people won't give you the whole plan. They'll say, okay, if you do business with us, we'll do the whole plan. Here it is, come in, we'll show it to you. We'll give it to you, whether you do business with us or not.
It's like a financial roadmap, and trust me, if I were on the wrong road, I would want to know, and now is the time. So stay with us. We're going to take a quick commercial break, and when we come back, we're going to talk more about the right ways to invest in this tumultuous time.
Good morning, Ben.
Good morning, Ben. Hey, birthday party for Carolyn 5. Happy birthday to you.
Good morning, Ben. Happy Monday.
Daryl's birthday, be there or be square. Happy birthday to you. As you can see from our quarterly report on slide number 62, we're trending in the right direction. All signs point to a very positive outlook for the next several years. If you peel back the onion...
Ben, do you have anything to add?
The work never seems to end until the day it finally does. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Hello and welcome back to Money Matters. I'm Sarah Peterson here with Dean Greenberg. And Dean, I do have a question for you. For those watching, what if they have never had this kind of conversation before? They don't even know where to start with a plan. Maybe they've never invested their money before, but they're thinking, I'm going to plan to retire maybe 5-10 years. What about those people? Is it ever too late?
You know, I heard that there's like 65% of people feel like they should have some type of financial plan, but only like 19% actually do. But at least I think it's growing. I think people were afraid. They didn't know what to expect. They didn't think they had enough money. They thought it was just for very wealthy people. That's changing. That stigma is changing. And I think social media, advertising, shows like this have actually made people feel more comfortable to go talk to somebody. And remember, when you go talk to somebody, make sure you feel like they have your interests first. Make sure that they are talking about long-term relationships and not just selling you a product. Make sure you feel comfortable that every question you have gets answered to the ability of you feeling comfortable. Because if it's not, then you got to find somebody that does that for you.
Well, speaking of feeling comfortable, one thing I love about the way your office is your family approach. You guys are family, and you make everybody else feel like family. So tell me about the importance of, everyone being involved. Because I know in our household, we all have these conversations. We involve our kids in these conversations. We're very transparent. But I feel like it's so important for husbands, wives, like family members to all kind of be on the same page.
One of the things we've been seeing lately, more and more, is as people have gotten older and they've been doing it on their own, they've been coming to us. The husbands are coming to us and saying, okay, I'm just checking out different things. I want to know, I keep listening to you, but my main reason is here. It's not because I can't do this, not because I haven't done a good job, but God forbid if something happens to me, my wife is really lost and she doesn't know what to do. And I'm trying to build a relationship with someone so they will have her in mind if, God forbid, something happens to me. And that's been happening more and more and more. So obviously we talk to them, he likes what, and then they bring in the wife. We build a relationship with her, and then we go from there. But we have a family office. Even when you come to our office, which, people can't believe we built it into our building in 2001, because it's still warm. You see, I picked out colors that make people feel comfortable. There's a psychology towards that. So when you walk in, there's woods, there's just a friendly atmosphere, there's warm colors, and people feel good. People mostly come in their shorts or golf shirts, and it's just a family place to do it, but we know what we're doing. We don't have to wear ties and coats and white shirts and stuff like that to be able to show people we know what we're doing. We don't talk above people. We answer the questions. And the team we put together understands what it means to work as a team. One of the things is, and we worked hard on this, a lot of the younger people, which we'll have on some future shows, you'll see them, is I made sure they understood, think like you're 60. Don't think like you're 35 years old, all right? And people have different thoughts when they're retiring, and if you learn that, you'll be more successful.
Easier said than done, I'm sure, for these young guys. But what I think...
It is, but it's not, because it depends who's mentoring them.
These young guys you have working, Todd and Dylan, your son, to me, I love this because if I were to bring my children in, they're going to resonate more with these young guys, and they're going to say, hey, they're thinking about this stuff. I should be thinking about this stuff. It's never too soon, because we have that mentality of, oh, I'll think about that later. I'll punt it. But I was just talking about this with a friend the other day, and she said the same thing. She said, if someone had told me what you're telling me 20 years ago, that 20 years ago me might have said, oh, I'll think about that later. How do we change that mentality of let's think about it now?
I'm going to go 10 to 15 years ago, okay? The coolest thing for me now is these kids that I coached 10 to 15 years ago that now are married, having kids. They're calling me and our firm to help them with a financial plan as they grow their families and want to buy a house and they want to put money away from retirement. They don't know. And it's like, I don't know where the time has gone, but to me, obviously they loved me as a coach then. They had to and trusted me to now come to me and start asking for financial advice. And then obviously they know Dylan and all, and we all work together. and they take it over and they deal with them. And so they go from understanding it, a firm, dealing with people their age and appreciating it too.
Let's talk about your coaching, because I think that's another thing that also makes you really unique in the way that you approach finance, almost like, this team effort, right?
Right.
I don't think a lot of people look at it that way, but to me, I would love to have somebody on the sidelines motivating me to be better, to invest better, to take better care of my money. I don't think all of us, most people don't have that.
Well, I'm just going to give one kudos here, okay? We coach at Tucson High, which is the largest high school in Tucson. It's got about 3,000 people down. It used to have 5. Dylan and I and this other guy, Zach, who I coached, and other people coached. Zach's the head coach. We were coaching. We took over the team last year. This year, we did something that they haven't done since 1971. We got into the playoffs, won our first playoff game, and won more games since anybody since 1971. Do you realize how long that is? We did it in 2 years. And everyone asks, how do you do this? And stuff. It's because it's a process of success. You understand if you have accountability, if you have a team thing, because we would talk to the team, you got to come together. It's you and us. We're going to make this happen. Okay? We might not have all the talent in the world, but if we work together and understand and put the hard work in, watch the film, do the things, come up with the plays, work hard, have heart, never give up, good things will happen. And it's pretty cool to see that come to fruition. It's not the first time we've done it, but it's the most recent time.
But how much of that plays into the way that you look at people's,
Same thing.
Yeah.
It's the same thing. It's a team. It's a team building. You can't do it on your own. The more people working in the same direction, the better off everybody is. So if we're all working together on your portfolio, you got everybody working towards it, having different ideas, researching, doing things, doing a financial plan. Every financial plan that comes through, they look at it, they think about it, they give me a write-up. We get together as a committee and talk about it and say, this is what I think, this is what you think, this is how I would present it, and then we make changes as we talk to them through that.
Why would you not want a team of people whose literally only job is to look out for your best interests and make sure that you are on the financial road to success, that you can achieve the goals that you want? We all work so hard throughout our lives, and what is the end goal so we can enjoy our retirement and get to do all those things we want to do? All we need to do is have a plan to get there. So give us a call, 520-544-4909. We're going to take a quick commercial break. We'll come back and talk more about your money matters.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Hello and welcome back to Money Matters. I'm Sarah Peterson here with Dean Greenberg, and we're talking about the extreme importance of having a financial plan. I had a thought during the commercial break of all the people out there that are thinking, well, I already have a financial advisor. He does my investments. I have stocks. But does that mean they actually have a financial plan? Probably not.
No, and some people are okay with that. They kind of went through it and they've got their income they need. They got the stuff and they have the relationship, and I can appreciate that. I know a lot of people say, always get a second opinion. I say, if you're comfortable with what you have, and every question gets answered, and you got, at least in your mind, that he has a plan for you, and he can tell you what the plan is, that's great. But if not, then that's not the case. If they're sending the money out to other people to manage, and they're not managing it on your behalf themselves, then they don't really know what it is. It's cookie cutter then. So then you definitely want to plan, because you don't know if that fits in with what your goals and needs are.
Mm-hmm. Well, we don't want a cookie cutter, because the reality is that my goals, you know, as a mom of 4 are going to be different than someone else who doesn't have children, is going to be different than someone else who's about to retire, right? I mean, my needs are very heavy right now, but hopefully in 15 years or so, we will be able to start thinking about what we actually want to
Well, you're
see.
still rather young, okay?
Well, thank you.
You're just coming into the stages of, you know, soon your husband's 50, I know that. And you're 50 to 60, you're getting your kids through school, you're going to do stuff like that, and you're putting money away, but you're going to make the money now and in your 60s. And then once they're through school, that's when you start socking so much more away and doing better. And it's
You know
a
what's
different
so
thing.
interesting, though? It always was my perspective that as we get older and, you know, closer to retirement, that we'll need less, because we're not, you know, necessarily spending the way that we're spending, you know, now. But I see it differently now, because I think, well, I want to do more when I have more time, right?
And everything costs more.
100%.
Okay? Everything, houses cost more. Now, if you did, okay.
I'll tell you, my children, my 16-year-old has this conversation with me so frequently. She says, Mom, I'm scared. How am I ever going to be able to afford to buy my own home? It's not, she says, it's not realistic anymore. Starter homes are so expensive. It really is unfortunate for
It's the
that
family
next generation.
unit.
Yeah.
Everyone I know is helping on one way or the other, okay? You know, it's very difficult. You know, both my kids bought homes a couple of years ago. These homes were going in 2018-19 for $200,000. They had to pay $350,000, $375,000 for it in 2 or 3 years afterwards, like two, you know, and they just keep going up. And their fear is, how much higher is it going to go? With them having it, they want to be part of it. So they figured out. So now they have it. Now they have kids, okay? Not Dylan, my other son. And what happens is, every time they look at it, they go, I don't know how people can survive on 80 grand. I don't understand how you can have a family of 4 and be able to put money away and do the things you're supposed to. Because it's unbelievable the last 2 years. And that's why inflation is the wealth beater. You've got to be able to stay up with inflation.
I mean, but inflation happened to us on such a minuscule level, and from the basic needs that we had: bread, eggs, you know, milk. I don't think as Americans ever were thinking we have to be worried about the cost of these things, but we generally were.
Well, and people keep saying inflation's coming down. The rate of inflation's coming down, but it's still going up 2.5% a year over the 8-9% we had before. So something that cost $100 before is probably about $165, $170 now. That's a huge increase. A house that was 100 grand is now 170 grand.
But I'll tell you something, you know, I also am a small business owner, and I feel like it's very hard to pass that along because people aren't understanding. You know, you have your cost of goods is going up and raw materials are going up, and nobody wants to pay for that. Everybody's expecting things to kind of stay stagnant when they're really not.
Most people know I had restaurants and stuff like that in Tucson for a long time. I don't know how, I'm so happy I got out when I did. I don't know how people are surviving that. The food costs, the labor costs, the laziness, they're not showing up, not understanding customer service, and the quality of food. I don't know how people in just like these quick service in these places actually can make a living doing what they're doing without working hundreds of hours a week.
So are we thinking things are turning around for the good then?
No, I do, but I don't know in certain industries, okay? I think people are going to get better. I think we're going to see wages continue to rise. I think the economy is going to do well. I think you're going to see prices come down eventually. I think you're going to see regulations be cut, which is going to help people. But everyone needs to be able to figure out a way to invest, whether it's through the 401k plans, Roth plans, something, to stay ahead of the game for down the road. Because you're not going to be able to live on Social Security. And too many people are doing that right now.
And it's just a question of, will it still be there for the next generation?
Some shape, way, or form it will be. It might not be Social Security where they're handing you the checks, but if I was in charge, one of the things I'd be looking to do is to change Social Security, where obviously for the next 10, 15 years, people are always going to get their money, but then start doing it on an 80-20 basis where people can put away 20%, get 80%, 50-50 basis to win 30, 35 years from now. We don't have to count on Social Security anymore because people have now put enough money away in a private account that cannot be touched until they're older with different restrictions. And that would create a lot more wealth for everybody.
In a perfect world, everybody would have a financial advisor like you in their corner giving them advice, but the reality is that they don't. And so to me, if I were watching this show, I would think, okay, this is an easy fix. I can make this call, I can find out, here is where I'm at, here's where I want to be, and let's figure out what the road is to get there. Because knowing is power, right? Knowledge is power. And we can't live our life by fear. The fear of running out of money, the fear of outliving your money.
Well, I think one of the big things that we do very well is everyone has a problem. And the problem is, will I run out of money? How much money can I spend before I run out, right? What we have is solutions. We don't sit there and go, oh, don't worry about it, or don't worry about the markets going up and down. We have solutions, real solutions that make sense, so they can understand it. Once they understand it, it builds trust. If you build trust, you can implement the plan, ups and downs and all that stuff. But if things happen and not working, you know what my biggest motto is? Change it. Change what you're doing. Change the plan. Everything has different things that happen. Something health-wise goes wrong. Somebody else needs this. Change it. Do along. If it's being successful, keep riding it. If it's not working, change it.
That is the theme of today's show. Change it. So first things first, that phone number at the screen is 520-544-4909. When you call Greenberg Financial Group, you will get an actual person on the phone, and you can get started with that financial plan that is made for you, and then you get to take it with you and decide what you're going to do with it.
Exactly.
Bada bing, bada boom. What's more than that?
Here's my New Yorker.
Every time we talk, I learn so much
Do you
from
like
you.
The Sopranos?
What? Oh my gosh, who doesn't love The Sopranos?
Well, I don't know. Some people don't even know The Sopranos.
Don't get me started on that. One thing I love about my time with you is I always learn something. I hope the viewers are learning something between your podcasts, your television, all these sense of media. We are aiming to educate people on how to live their best road to retirement. And we hope you enjoyed learning about your money matters, and we'll hope you'll join us again soon.